Hello and welcome to the Clear Crypto podcast brought to you by Starkware and Telegraph. This is the place that we're breaking down blockchain and making it accessible. My name is Nathan Jeffey. I'm a journalist who's fallen into blockchain, and I'm joined for the first time in this series, in the flesh, right next to me in real life by the wonderful Gareth, head of multimedia at Telegraph. Gareth, how are you?
I'm great, Nathan. I'm glad we got to finally meet up in person and do this here in Cannes during ECC. Great to see you in person and actually do the podcast in the flesh.
Absolutely. He does exist. He's a real person because there are many AI podcasts out there. So I think that's one thing, at least, that we bring to the table. Now, on this personhood. On this stage, just a few minutes ago, Gareth, you were having some fascinating conversations, which I hope we'll actually talk about on a future episode. But tell me, this was kind of the Cointelegraph side event of ECC. ECC is the main event of Ethereum, and it really shows kind of the impressive nature of Cointelegraph that you could put on an event here with such a massively impressive lineup. Tell me your favorite thing from today here in Cannes.
Yeah, just for those people out there that don't know much about Longitude, this is number 5 of these series of events that we're doing. We try and do them at the biggest events around the sort of crypto calendar. Obviously, we're here in Cannes during ECC. Most of the biggest names in Ethereum, the ecosystem, were here, and we tried to have a sort of pulse check of the Ethereum ecosystem with some very prominent names. And we also had a big, long look at DeFi and RWA, which is what we're delving into in this particular episode of the podcast. So for me, the biggest takeaway was speaking to Sergey Nazarov from Chainlink and Stani Kulikov from Aave about DeFi, about oracles, about bringing data and decentralized finance protocols together, and why it's such an important innovation, and how this kind of infrastructure is most likely going to be the future of all financial infrastructure, trading 24/7, 365 days a week, permissionlessly. It seems like it's ready to disrupt everything. We're close to that point already. We've got the infrastructure, and I really loved what both of those speakers said on stage today, and it makes me very grateful to be a part of this industry, because I think there's a lot of really smart people building very important infrastructure and tools, and they're having a real world impact as well.
And there's a lot of enthusiasm here. I kind of wish you could bottle that and take it away with you, because, then we all go off into our normal places, and sometimes it feels that other people don't get that blockchain vision. But there is so much enthusiasm here. And just to share with listeners who might not have been to a blockchain event, there's something very egalitarian about these events, that there's not a lot of snobbishness. People will go up to each other. They don't need an intro line. People will just say, hey, who are you? What do you do? It could be a 17-year-old coder talking to a, VC in his 50s, and everyone just talks, finds some common ground. And people say that these events are reminiscent of early internet events where there's kind of that enthusiasm. Is that something you feel, Gareth?
Yeah, definitely. I mean, we were exploring in depth the sort of future of Ethereum in a mini documentary that's going to come out soon on Cointelegraph's platforms, but I definitely got a big sense of that from everyone in the Ethereum ecosystem. They're all kind of, not everyone agrees on where everything's going, but they all agree that we need this technology, and we can agree to disagree on some things, but everyone is sort of aligned that we want to have technology that is decentralized, that allows us to own our data, own assets, have full control of everything, and make that a reality.
We don't know which is going to be the killer app, but I always feel at these events that if you walk around the booths, if you walk around the events floor enough, you'll be able to say in 5 years' time, I went there, I saw the folks who are making it really big, and I saw them when it was just a couple of guys sitting on a booth giving out T-shirts, which is fantastic. But let's move on, because this week we have a fantastic interview about real-world assets and about tokenizing real-world assets. Gareth, do what you do best and break that down for us, what that actually means to tokenize a real-world asset.
Yeah, for sure. So, I mean, RWAs, real-world assets, can be anything. It can be a piece of property, right? Like a piece of real estate, a house, which is typically represented by a title deed. It can be stocks and shares that are traded on conventional stock markets that can only trade Monday to Friday, 8 a.m. to 5 p.m. It can be gold. It can be currencies like stable coins, one-to-one dollar-backed token is a form of a real-world asset that has been tokenized. So anything that exists in the real world that we create a digital representation of and put it on a blockchain is a tokenized real-world asset. And we can get into the complexities and why they are so impactful and influential, but that's the long and short of what they are, really.
Mm-hmm. And essentially, there are so many things that one could invest in, and you're going to get some type of certificate that you have invested in it. But that certificate could prove to be fraudulent. There could be all sorts of issues with it. When you tokenize a real world asset, your ownership of that asset is stamped on the blockchain. Nobody can get rid of it. Nobody can delete it. Nobody can undo it. And I think that's what makes it so attractive. This is not something that, is exciting for people in the technological world of blockchain in a certain niche. This is something that is relevant for anybody who wants to invest. And one of the ideas that I love here is it just really flattens the world. Gareth, you have a bit of money. You want to invest in, 0.5% of an apartment building in Tokyo. To do that in the real world is almost impossible. The lawyer's fees would be prohibitive. Mm-hmm. But you could very easily have a blockchain project that allows you to have that slice, allows you to put the money in, gives you that token to prove that it's yours. Mm-hmm. And really, it could change our financial world. And Cointelegraph, you've got the slogan on your T-shirt, the future of money. So these are the things that really excite us. So we're going to cut now to the interview. And Gareth, I will speak to you after we've watched and listened to the interview. Okay, I'm going to bring in our guest now. I'm very excited to speak to Julian from a project that is building on Starknet called Lever. Actually already has a prototype on Starknet and is creating a lot of interest in the Starknet community. How are you doing today?
I'm doing great. Thank you for having me.
Good. Yeah, thanks for joining us. Now, real world assets. Gareth and I were just talking a little bit about what we mean. And we were giving listeners a sense that any asset from what we call the real world, that you would like to have its footprint or its imprint within blockchain to be in some sense secured within blockchain, that can be done through what we call tokenization. That can be done by having some form of tokenization of that asset on the blockchain. Tell us why you think that has such interest and advantages for regular people, not for people who are living their life championing the cause of blockchain, but just for regular people. What's the benefit here?
The biggest one is if you have capital that you want to raise, it's a new source of investors. So take, for example, the most boring industry out there, I don't know, the utilities, right? A new utilities company comes out, they're raising capital, they want to expand and take on the major players of today. They're going to have to go and raise money. And if they can only focus on traditional networks, then they're going to have to go convince the world of private bank managers, private wealth managers, banks, etc. The value of tokenization, and specifically of linking it to on-chain capital as it currently stands, is you have a much more agile capital base and a new group of investors. That doesn't mean investors who are anonymous. A lot of major companies, public companies, hold massive amounts of Bitcoin and are very public. But the idea is it's something different. And so something I found at this point, probably been in the tokenization side of the crypto world for the better part of 2 years, what I found is the biggest interest you hear from the Yanis's of the world, the KKRs of the world is, well, we can actually have exposure to a new capital base that we have no ties to. So this is fascinating. You mean there's a $1 billion audience? Great.
Yeah, the no ties element is very interesting because it really flattens the world. I could sit here and I could theoretically take $100 and buy a tenth of a percent of an apartment building in Tokyo and have that tokenized. Once I've done that, that's flattened the world. I can do that anywhere, but the blockchain element also doesn't just make it simple to do. It also ensures that nobody can take that away from me, that is mine, and that nobody can dispute that because that is the ultimate title deed. Now, in the world of real estate, you can't get a title deed for a 1/1,000,000th of an apartment building in Tokyo, but on blockchain, you can. And that is really exciting. That is something that's really, really radical because a lot of our conversations in crypto go, maybe we're a bit of a hammer in search of a nail. Where can we slot crypto in and say, everybody needs crypto. But here, this is something that you really couldn't do before. I couldn't get that slice of an apartment building in Tokyo, or all of these options are open and your holding can't be disputed. What else should we know about this to understand what we're talking about? Give us a little slice of knowledge to deepen our understanding at this point.
Of course. So what we're talking about right now is the direction of you have capital from crypto flowing out. And in this case, the value that real world, everyday companies, industries can benefit from sort of the blockchain ledger, the immutability. The other part that I think people don't talk enough about is what about the value or the priorities of on-chain capital, right? How do they look at the rest of the world? What do they want to do with their assets? And I think in a world where you have a lot more public companies in Japan, and I just heard a friend going to do this in the Netherlands, the US, and Latin America, all these public companies buying Bitcoin on their balance sheet, you have an increasing array of companies that now hold on-chain capital and just don't know what to do with it. They're not familiar with DeFi. They don't have accounts on Binance. They're completely new to it. And so under that context, and some of these institutions, I mean, I just read of one yesterday that bought 3,000 Bitcoin on a whim. It was from a podcaster. I didn't even know he was into this Bitcoin pubco world, but he was, right? Buys 3,000 Bitcoin. What's he going to do with it now? And so the value of tokenization isn't just, okay, we have immutability for the real world to sort of engage and be on better footing. That is one part of it. The other part of it is you have huge holders of on-chain capital that want to do something with it. And they want to do something with it in the blockchain world, right? They didn't just go and buy Bitcoin just to return to traditional finance and sell all of their holdings. So to the extent that you can create tokenized assets that coexist on the ledgers where Bitcoin, where Ethereum, where Solana live, you now have new investment possibilities for major holders that are looking to diversify. They're looking to earn yields, but they want to do it on terms that are serious, scalable, and uncorrelated.
Okay, we're going to come in a moment to your company, Lever, and hear exactly what you're doing. But first, give us a little bit of a bird's eye view of the discourse in America at the moment, because it's interesting. There's a lot of interest at the moment in giving a restart to blue-collar industries, to American industry. And in some ways, this seems, divergent from the kind of ideals you have in blockchain, which is very internationalist. However, what you're doing actually, and you're going to explain it to us, actually can help reconcile those two. Tell us a little bit about how tokenization can actually reinvigorate American industry.
Of course. The biggest issue that you have with reinvigorating American industry is that it's hard, it's complex, and there's little precedent for it. I studied economics undergrad, almost got a PhD in it actually in a former life.
The almost PhDs are the best ones. I almost got a PhD as well.
It's a great crew of people who decide who perhaps were a little too restless to commit to one particular subject. I definitely count myself within there. But see, that's the thing. It's with economics for countries at the technological frontier. That's really where the United States and even I would say where Europe are. There's a question mark of where does growth come from next? And in particular, how do we, we've liberalized all these different economies, but there are gaps, right? Maybe the average New Yorker is much better than they were 20 years ago, but the average Iowan isn't. And so the question is, well, how do you reinvigorate parts of the country? And this again applies beyond America, but I know America best. How do you invigorate parts of the country that in many ways have been forgotten, right? There's not a clear capital base that's ready and excited to make investments, because if they had been, then they would have done it 20 years ago. Think telecommunications companies. There's a lot of parts of the Midwest in the United States that are not connected to broadband. That cellular service is super weak. I knew that when I worked on presidential campaigns. I toured around farm towns that didn't have any cellular connection. It's a real problem. So how do you do so? How do you create economic activity where broadband is weak? How do you connect manufacturing hubs to places where those skills are not as prevalent? And really the answer is look at domestic sources of capital that are stranded. And I think that's really where on-chain capital, Bitcoin specifically, becomes pretty powerful, because you have a lot of public companies and mainstream individuals, I'd argue, that are based in different countries, in the US specifically, that are looking for places to earn yields off of their on-chain capital. But they're also cognizant of the fact that blockchain is still not mainstream, right? It's not easy to just go buy a stock with your Bitcoin balance. You're going to have to jump through some hoops. And so to the extent that you can connect the Bitcoin ledger to real world capital raising opportunities, specifically those in the American interior, places, American manufacturing, you can actually connect an audience that really wants yield and can't get it from mainstream sources with an audience that has a tremendous amount of potential, but finds it hard to raise capital. It's a match made in heaven.
Okay, fantastic. Something I always want to know from crypto projects, which is, how is what you're doing actually different from what people are able to access today? How is it a different type of investment? Maybe there's a story here about yields. You tell us all about it.
Most crypto projects are built around the entire idea of token issuances. So they launch a token, this token will increase in value, there will be speculation around it, and that's how people will make their earnings. There are plenty of projects that have done that successfully. I think there are more examples of projects doing that unsuccessfully and sometimes fraudulently. The difference with Lever beyond that this is my reason for doing this as opposed to simply doing any other DeFi project is I want the yield and the value that we bring to our users to be anchored in the real world, in crypto uncorrelated means, from crypto uncorrelated sources, such that when somebody comes and invests their Bitcoin, thinks to leverage it, collateralize it, whatever, they're earning returns from an activity that's completely divorced from crypto markets. In some ways, it's ideological. I think that the real world has a lot of problems that Bitcoin should be there to fix. But in other ways, it's purely financial. If I'm building an investment portfolio, I want to diversify. Having some staking is great. Having some lending and borrowing is great. Having real world assets, specifically those that, again, are tied to core, critical, vanilla industries, right? The most boring industry if possible, but earning you dollar cash yield, that to me is the value of Lever, really. It's that diversification potential.
Very interesting. So essentially, and we always stress that there's no investment advice or anything like that on this podcast, but essentially the idea of what you're shooting at here is giving people that element of stability, or hopefully an element of stability within what they're doing.
That's exactly right. In the same way that if I own a house and I take a line of credit off of it to make some sort of investment, maybe I want to invest in the stock market with it, or maybe I want to, I don't know, I have a friend who's a lawyer, and he did a big case with a Mexican billionaire who leveraged some of his artwork in Mexico City to pay for a number of different luxury purchases in the US. The whole idea with Lever is, how can you use your Bitcoin to have a footprint in something that's unrelated to crypto? Not to undermine crypto, but simply to earn dollars from another source. That way, you're building equity, you're earning cash flow, you're not selling your Bitcoin, and you're doing all of these things through different parts of the broader financial ecosystem. There's a run on Bitcoin, you're protected. There's a run on real world industries, you're protected. The idea is to have your foot in a lot of different places at once.
Julian, you didn't start off in crypto. You were actually at Bridgewater, which is one of the most traditional finance firms in the world. Take us in a moment through how you went from one of these buttoned up, I assume you were wearing a suit kind of company, to the wild frontiers of crypto.
A great question. So from suit to crypto, I think a priori definitely looks like a wayward journey, but there's a lot of reason behind it. I think when you're the deepest parts of finance, something very clear comes to anybody who's on the technical side of things, which is you're not really working to reinvent systems. You are working within an existing set of systems that are often inefficient. And I think a lot of people within places like Bridgewater and even major banks constantly complain about Rails and, well, I can make this trade and it takes this amount of time and this payment is going to have this sort of fee. Everyone is simply optimizing to an existing set of parameters. One of the first things that I felt being in that environment was, well, wait a second, I want to question why we have the limitations we have. Why is it so difficult to create a customer account? Why is it so difficult to update a registry or update a record whenever a merger happens? Why are there trading hours? Why do we have to be at the office 30 minutes before market opens and 30 minutes after? I then moved into the payment space and was working at a unicorn company in Hong Kong called AirWallets. Their whole business model was bringing money into and out of China. And I was one of the lead product managers for a rollout of one of their payments products in Indonesia. Now, I joined the company in large part because I wanted to have a much better technical grasp, or let's say more authority on revamping the financial rails, making the financial system fairer. But I found that my job was actually more one of negotiating with regulators and negotiating with big banks like Standard Chartered or others like it. I wasn't really doing technology. I really wasn't inventing or innovating. I was simply, again, working within an existing set of parameters. And so it was during my time in payments that I sort of, I guess you could say, had the final straw. I said, no, I want to be in an industry that is fundamentally reshaping the financial system, because I think a lot of problems that we have are due to these legacy systems and people not questioning them enough. And so it was around that time, this is around 5 years ago, that I started taking crypto and blockchain technology much more seriously. I'd been introduced to it when I was in high school. A friend of mine used to use the Silk Road all the time, and so he would always talk about his Bitcoin mining rig and how he was able to buy all these nefarious things on the internet. I just ignored it. But then fast forward to 2020, 2021, it's COVID. People are stuck indoors. People are talking about new types of tech startups, and that's really where I came upon. Started with Ethereum. I then got into the Solana ecosystem, and now I find myself in Bitcoin. And so that's really the reason. I think we're in an industry that is fundamentally creating new financial primitives that unlock new types of use cases. They allow for co-ownership. It allows for 24/7 settlement. All of these things that are simply impossible within traditional finance. And I'm finding that within the crypto space, if you do good work, it can be equally, if not more, lucrative than rising the corporate ladder at a financial firm. So yeah, that's my journey.
And I always like to ask with those stories, your friend who was talking about crypto back in the day, does he still follow crypto? Is he still involved, or has he gone off to other places?
Well, so his is actually a sad story. He actually passed away a couple of years ago. But up until the point when he passed away, it was the biggest Bitcoin advocate. And in many ways, he would laugh in my face about it. He'd tell me, Julian, if, when we were 17, 16, sitting in my, backyard, and I was telling you about he built a little shed in his backyard that was mining Bitcoin. I used to make fun of him that was the rinketiest, dinkiest little shed that was too hot to go inside. And it never made sense to me why he was running all these computers. And he would tell me, 10 years later, he's like, man, see, if you had just followed along, you would have even had to go to college. You wouldn't have had to work at a Bridgewater. You would simply, have all this money there sitting. And so, yeah, he was an advocate start to end. But ironically, he was also an investment banker.
But that's quite touching, the sense that he would kind of actually be proud of you watching you having the conversation like this on a podcast like this.
That's one of the biggest motivators for what I'm doing and why I am a crypto entrepreneur. He always wanted to do that. His life plan was he had been mining Bitcoin, and he was sort of like, a weekend observer of sorts. I mean, he had accumulated quite a bit of it, had a day job, and his whole goal was to pivot away from that day job into crypto. And so anyway, when he passed, I was already in the crypto industry there for several years, but that was a really big impetus for me saying, you know what, I'm going to, my way of honoring his legacy is doing the work that I think he wished he would have been able to do.
That's very touching. People often think blockchain, crypto, all about tech, kind of, as if we're robots who walk around doing tech. And what I've discovered from doing this job is there's so many kind of, emotional, very personal stories that are there. So let's move forward and tell me your project Lever. Can you explain to all of our listeners, whether they are brand new to crypto and really just getting into the space, they may be an OG, whoever they are, can you explain in kind of very clear terms exactly what you're doing?
Of course. I think in the simplest terms, I'm connecting idle on-chain assets, specifically Bitcoin, with real-world investment opportunities. So when people first start owning Bitcoin or ETH or Sol or any sort of on-chain asset, their first thought is, wow, look at the price, right? The price is going to increase. This is incredible. I'm making a great investment. 6 to 12 months passes and they're deeper into the industry, and they start hearing about terms like staking and DeFi and all of these different sort of lending apps that have come out, and they start thinking, well, it's not just about holding that crypto that I bought, it's also about investing it somehow, doing something with it, earning yields. Where Lever comes into play, what I'm building is I want to make that yield generation process as transparent, simple, and mainstream as possible by tying that yield to actual business activity. So some people have questioned, well, if people are in crypto, that sort of by definition means they don't want to be in the real world, right? Wrong. If you look at all of most of the Bitcoin headlines that have come in this year and even in last year, it's not internet natives buying this currency. And I spent the last 2.5 years leading an innovation team at Marathon Digital Holdings, the largest American Bitcoin miner, one of the biggest holders of Bitcoin, 50,000 of it on the balance sheet. And what you find by being in an environment like that and talking to these massive holders of Bitcoin is the new age of Bitcoin buyers are really mainstream people. They're often traditional finance people. They're often old colleagues of mine from Bridgewater and my BCG days that are really coming into the industry because they see the asset has an incredible run to it. But see, the interesting thing about traditional financiers getting into crypto markets is their first thought is leverage. They don't just buy assets to hold them. In fact, if you go tell a financier, hey, here's an incredible asset, keep it in an account like a checking account, they're going to laugh in your face. They're going to say, wait, if this asset is falling by a bunch, then I should be, engaging in some sort of derivatives play with it. If it's appreciating, that's collateral. And that's really where lever comes into play. I want Bitcoin to be pristine collateral. I want it to be useful collateral.
We were talking just before we hit record about the concept of leverage and how important leverage is in this world. And I didn't ask you, but I'm guessing that's why you called the company what you called it. Run us through in very, very clear terms why leverage is so important.
It's simple. If I hold an appreciating asset, I ought to be able to use it to increase my exposure to other sort of assets. In its simplest form, for a normie, think your house. You don't just sit on your house for 20, 30 years and do nothing with it. A lot of people will have a house that appreciates in value, and they'll use that as collateral to go get a loan to invest in something. Maybe it's in a new business. Maybe it's in, taking out a loan for a college fund. Whatever it might be, when we have appreciating assets at our disposal, these are arsenal. This is basically our arsenal for more financial firepower. And that's leverage in its simplest form. It's extending yourself or empowering your financial future to be bigger than what it is based on a hard base of sorts.
I love that you use the word firepower, and I'd like you to unpack that a little, because there's obviously a lot going on there when you say, take your firepower. And it's actually part of the story of Bitcoin, I guess, because different people have different takes on Bitcoin. The Bitcoin community has its disagreements sometimes on exactly how purist we should be, whether this should just be digital money that is not put to work, or whether it should be doing all sorts of things. And there's so many complexities within the Bitcoin community. So unpack that a little bit for us, the idea of firepower.
Of course, I think there's a lot of approaches to how Bitcoin should be useful. But I think if there's something that unites the digital gold, the payments, the anything audience within Bitcoin, it's the idea of being able to live a good life, to live a free life. In fact, that's sort of the premise of decentralized currencies, that we don't have to be at the helm of inflation-ridden economies with traditional financial authorities that limit what we can do. So I think the most clear example that I saw of this 2 years ago, I was at a Bitcoin billionaires party in Puerto Rico. I won't name who, and I won't name who exactly said this next comment, but I'm sitting next to an OG who's held since 2011, 2012, right? This guy probably in the thousands of BTC. And he's looking at this mansion. He himself lives in another part of the world, doesn't live in a super luxurious place, but his first comment about this mansion was, wow, I could afford this, but I'd have to sell Bitcoin, and then moves on, right? We moved on to a separate conversation topic. That scene replays in my head, because you have here somebody who is a multimillionaire, but who really can't use that to just live life ambitiously because of this the nature of the Bitcoin ecosystem right now, which is you hold it or you do nothing with it, because there really aren't credible ways to put it to work. And so for me, firepower, it's an exercise of freedom, really. I think it's the ability to hold an asset, an appreciating asset, and be able to live your life in the real world, which, for some might say it's unfortunate, but it is just reality. In the real world, people still need fiat. And so to the extent that you can use your Bitcoin to leverage, or in other words, to acquire more fiat currency without selling that underlying Bitcoin, it allows you to buy better houses, send your kids to better schools, travel to new parts of the world, be free in the way that the currency was intended to enable freedom.
Fascinating stuff. Now, I do emphasize everything you say. There's no investment advice there. That is what you're shooting at. And just tell our listeners, if they want to follow you on socials, if they want to find out more about what you're doing, what's your tag?
My tag is Julian with 2 L's, 0701. You can also follow Lever BTC. That's LEVER BTC. Either one works.
Thank you so much for joining us here on the Clear Crypto podcast. Pretty interesting stuff, Gareth. What do you think?
Yeah, definitely. In general, I'm very excited about real-world asset tokenization. They can be incredibly impactful, and essentially they democratize access to a variety of different real-world assets. I mean, whether it's gold, property, or money, we can buy a share in those assets and trade them 24/7 without asking for permission. And I think that's the true value in it. The simplest way that I think about this is, like you said at the beginning of the episode, I buy a share of a piece of real estate in Tokyo that I wouldn't be able to do otherwise on a blockchain. And with that share, I could earn rental income that's paid out on a blockchain every month from the percentage ownership that I have in that. And up until now, traditional infrastructure does not exist
Yeah.
to allow us to do that. And I think that's the real power.
Yeah, and it's not just practical. I mean, whenever you speak this kind of, this undercurrent, Gareth, of ideology that you, and I think this is what makes Cointelegraph's reporting work, you put the user or the potential user at the center. And it feels to me that when you're talking, you're actually kind of seeing that long vision, which is that it essentially liberates humans from the constraints of being told by your bank, no.
Yes.
You can't do what you want now. With my bank, I'm not even allowed to go into the bank and see them anymore unless I've made an appointment online. And they have my money. They're looking after my money. So it really feels that there's kind of that ideological element there with you. Anyway, we're going to talk more about all of these things in future episodes. Maybe we'll try and do some of them in person because this is great. But Gareth, if people are watching and listening and can't wait until the next episode to hear from you, they can find you every single day. Where can they find you?
Yep. Cointelegraph has a daily X show called Chain Reaction that myself and Robert Baggs host. So 3:00 Central European time, 9 a.m. Eastern time. Those are the two main time zones I'm going to stick to. Join us every day, Monday to Friday. We unpack the biggest news of the week or the day. We have fantastic guests, and we really try to bring you news, views, insights every day that are relevant. And then me and Nathan jump into the bigger, more important details on the Clear Crypto podcast. But yes, you can find us every day there on Cointelegraph's X account.
So all that remains is to thank our wonderful production team at Tonal Media, to say tune in for the next episode of the Clear Crypto podcast, and for Gareth and I to find a beer. Thank you for listening.
Cheers.